Hi everyone, welcome back to my channel Achieving Alpha. And in this video, we are going to talk about creating a killer long-term portfolio. Now, long-term investing is primarily about three things. The first one is that you should buy good quality stocks which have strong fundamentals. Secondly, you should buy them at correct valuations. Now, to look at the valuation of a company, you can look at PE ratio or PB ratio. Now, this is more into fundamental analysis. Don't worry, we'll create some videos on that soon. And the third one is showing patience and holding your long-term portfolio stocks. So now let's look at some of the tips that you can use to create a killer long-term portfolio that can give you maximal possible returns in the long run. So the first point would be to diversify your investment according to different sectors. Now that's pretty obvious, right? You should not put all your eggs into one basket. You should try to pick stocks from different sectors. You can pick FMCG, you can pick NBFCs, you can pick banking, you can pick IT, you can pick the market leaders or each one stock from one of these sectors and then invest in those. Now you should try to prefer stocks with high ROE or ROCE. Now if you have seen my video on 5 large cap stocks and 5 mid cap stocks with very high growth potential, there I talk about ROE and ROCE all the time because this is a really important factor that you should consider. Why? Because ROE is basically the return that a company is generating on all the equity it has raised. So that should be a high number. And similarly, ROCE is the return which the company is generating on all the capital that it has employed, including the equity it has raised and including any other debts which it has taken. The third point is that you should try to prefer investing in debt free companies or companies which have a minuscule debt or debt which can be controlled by the company, because this is really important that if at all any pandemic like COVID comes, so the companies which have low debt or which are debt free can survive easily throughout any such crisis. So just try to invest in debt free companies. Fourth point is buy at a fair valuation for maximal returns in minimal time. What does this mean? You should never buy a stock when it is too expensive or when you don't see the value in the price. Buying a stock at a correct level is very important and you should take care of that. I will also show you some of the holdings that I had picked during April and May and what sort of returns I am getting. And I've exactly had followed these points to get a decent returns. I will show you in the next slide. The next point is that you should always choose sector leaders to minimize risk and maximize returns. Because if you are going with the sector leader, if there is a problem with the sector or if the whole market is bearish, everything is bound to go down. But the thing is that if you are with the sector leader, you can have that faith and that confidence that that particular stock which has fallen will rise soon. And there is obviously no need to explain here that being with the sector leader is always going to be advantageous for you. The next point is that don't run after penny stocks, especially those whose fundamentals are very weak. Now, that's pretty obvious because a lot of retail investors who don't have a lot of capital prefer investing in penny stocks thinking that they will double in years to come. But the thing is that, to be very honest, if you pick 10 penny stocks, even with very good fundamentals, the chances are that more than 7 to 8 penny stocks will disappoint you and will ruin your capital. So please don't run after penny stocks. Even if you want to, just research the company thoroughly, go through its fundamentals, and see if the company has some potential. And just to try invest a very small amount, that much amount, even if you lose, you should not worry about that. So for trying, you can definitely invest that, but please don't keep majority of your investment in penny stocks. Your money will be ruined pretty badly. The next point is a pretty famous quote by one of the most successful investors, which is Mr. Warren Buffett. He says that be greedy when others are fearful and vice versa. That is, be fearful when others are greedy. The markets are at all time high and a lot of people want to invest right now. I really don't think that this is the proper time to create a long term portfolio because the market's valuation is pretty high at the moment. Always invest in dips. That's something that we'll talk in the next point. But you should always be fearful when others are greedy, and you should never try to invest when the market is in a greed mode, which is the scenario at present. So the next point, as I mentioned, is that you should always buy at dips and not in SIP mode to reap the maximum benefits. Now, this point might be partially true, not totally true, because people who are full-time working professionals, I myself work uh, in a full-time job and I don't have a lot of time to track the stock markets actively, but still I manage to find out some time to spend for the stock markets, so I can keep track of the markets and I know the appropriate levels because I'm thorough with technical analysis, and I know that these are the companies which have strong fundamentals and I need to invest in these, so I know the correct levels. So always buy at dips, not in SIP mode, because in SIP you will average out your returns because you will buy at the lower levels and you will also buy at the higher levels, which will average out your cost. So I always prefer buying at dips to reap the maximum benefits. But again, this point is not applicable to everyone because everyone might not have the time to track the stock markets that actively. Now, the next point is that never buy at a 52-week high unless you have a very long term vision, at least 7 to 10 years. If you're planning on investing for more than that time frame, definitely you can enter at any cost, provided it is a good and a blue chip stock, and you can wait. But if you want maximal returns in minimal time, please don't buy at 52-week high and sell at 52-week low. That's a horrible strategy and a horrible mistake that a lot of beginners do. The next point is that you need to have patience and never sell a blue chip companies and loss. When the market fell in March because of the COVID 19 crisis, a lot of people sold a lot of good blue chip companies in loss. People sold Reliance and Bajaj Finance in loss, and now the same people are regretful that why did they do so? Because believe it or not, in the long run, markets are always going to go up. So if you're invested in a good company, have some patience. Don't expect that the day you invest in that company, next day onwards, it is going to run like anything. No, that won't happen. If it does, consider yourself lucky. But always have some patience and hold on to good stocks. Never sell them in panic. The last point is that you should never sell your long term holdings, no matter how luring the profits or returns might seem, because a lot of people have this notion that they are going to enter today and then exit when they get a good profits. If you are a swing trader, my friend, that's completely okay, just do this. But if you are saying that you are doing this for a long term thing, please don't just keep buying and selling, because that is the mindset of a trader, and here we are talking about investing and not about trading. This is called swing trading, to buy the stocks right now and then sell them after some days or some weeks. So don't do that. If you are trying to invest, if you are trying to invest for long term, just be in those good blue chip companies and just hold them. Don't keep buying, selling again and again. So as promised, here I will show you some of the returns that I have generated on a portfolio which I had created around April or May. And these are my top 10 holdings for now, which are giving me the maximal returns. Now, I have not displayed the name of the stocks because I don't want to provide any stock tips to anyone, because this is not a buy sell recommendation. Please find the disclaimer in the video description. And second reason why I have hidden is because I don't want you to copy these stocks and invest right now. The market is at its all-time high, and it could be really dangerous to invest at this point of time, because if you don't have patience and you invest in these stocks at this point of time, they are quite run up, and you might be losing your patience and then you will sell those in loss, and this is not what I want. So these are some of the holdings. You can see that the maximal return I'm getting is even up to 170%, and this is all in April, May. So you can see it's roughly about 7 to 8 months, and I'm getting these sort of returns on my top 10 holdings. And I see that you have 121%, and the minimal return that I have is 34%. So these are the advantages when you buy the stocks at dips and not in an SIP mode. And you can see that in a pretty short time frame, I'm able to get these sort of returns. So definitely you should invest when the market is at dips and not when the markets are rallying, which is the current scenario. So I hope this video gave you some insights as to how you can create a good and a killer long-term portfolio that can give you really great returns in the long run. So I hope you found this video helpful. If you do, please consider liking the video. That motivates me. And also consider subscribing for more such content, be it related to trading, trading strategies, long-term investment, and a lot more related to finance. So I guess this was it for this video then. Thank you so much for watching. Take care and bye-bye.